This is a stock analysis update for GlaxoSmithKline plc. Glaxo are the 10th largest pharma company, and this year they actually split off their consumer healthcare division to form a new company called Haleon. But GSK's share price has actually dropped about 20% from that point. And the same has happened for Haleon after they were floated. And this does not make sense for me. Both Haleon divestment and GSK shouldn't both drop in value by 20%. And so that could actually represent a opportunity because those significant drops in share price do seem irrational. And so in theory, you could actually just invest in both on that based on that anomaly without doing any research. On that note, I should say as I start this video that I just do these videos just for fun as a hobby. And so make sure you go and seek advice from a professional before making any investment choices. So back to GSK, and they're targeting an increase in revenues from 23 billion to 33 billion by 2030. They've got a very strong vaccine business with significant revenues coming in from respiratory and their age drugs. Now the established here, which is 28% of their revenues, this is their products from long ago which have gone off patent, and so as soon as the competition comes in from the generics manufacturers, the revenues shrink rapidly. And so this is the problem that pharmaceutical companies like GSK have, in that they have to continually come up with new medicines to generate revenues to replace those being lost to the products that have gone off patent. So we can see here how their vaccines is a very successful part of their business. It actually dipped because of COVID, because people weren't going on holiday and people weren't able to go to see their doctor because of all the COVID regulations. But now they're rebounding from that. And vaccines is a very strong business unit for them with good growth. The established is in terminal decline, as I've explained, but it does get topped up with products that leave the main that lead the main lines as they go off patent. An example of that is in the respiratory. We see very good growth in respiratory, and as we can see in 2020, some of their Ellipta products got moved from the respiratory division over to established medicines, and then HIV drugs make up a good portion there of their overall sales. And then immuno and oncology are only a tiny piece of the pie at the moment. But the management at GSK have pinned their hopes on future growth in this area in order to achieve their 33 billion by 2030. So this is a list of their sales for all their main products, which you can print screen if you're interested in looking at that. And now I'm going to go through each of these product areas and try and establish what's the medium and long-term outlook for each of these. Starting with established sales, and here we can see how as you get increased generic competition, the sales wither away for their established products. Serotyne and Advair here is a good example of that. But there is a certain level of bedding down. After a certain level, when it beds down a bit, then you do get like a shallowing of the decrease. And then you've also got to consider that you do get new products joining this bucket as they go off patent. So overall, I've decided on a neutral outlook for their established sales on the both medium and long term. Looking at respiratory, and you can see here how the Ellipta products here were contributing quite a lot, and then they've then been moved to established sales. But Trelegy Ellipta is one of the best, is one of the best inhaler products there is, and you can see how that's growing. Actually, this is interim data here, and they had 50% growth in the first half. So we've got very good, strong future growth for both the Nucala product and the Trelegy Ellipta. So I think they definitely have a good medium-term outlook. When we look at their future pipeline, there isn't very much. There isn't actually very much. The COPD indication for Nucala, that could be a blockbuster. I haven't really researched into it, but to be honest, I think I've decided to be conservative and just assume that doesn't happen. But it could perhaps be a potential blockbuster. But other than that, there isn't really much. But when I looked at the patent expiry dates, and these are actually more around the actual, more around the device, but the compound expiry dates are actually not far earlier than that, not much earlier than that. And we do have quite long expiry dates for the patents for these. Plus, this product, which was the best respiratory product there was before Ellipta, it actually took 20 years for generics manufacturers to develop a generic version of the Advair discus that actually got approved. And so these respiratory products, they take a long time before you can get the competition in there. So I've decided to give them a neutral outlook for their long term based on those facts. But then you've got to remember that after about 10 years' time, when the competition does come in for these, then the outlook will be quite poor. So here we're on to the vaccines, and actually, when things move into the established bucket for the vaccines, the revenues actually remain fairly stable compared with other medicines. And we see that their shingles here is doing very well. That's actually expected to be a 4 billion product by 2027. So we definitely have very good medium-term outlook here. And then looking at the pipeline, there's lots of things in phase 3 and quite a lot in phase 2. So I've given them a good long-term outlook for vaccines. And I do see this trend actually continuing quite a bit. I'll quickly mention that GSK are fairly good with their own in-house vaccine development. You see all the things for the GSK label here, the stuff that they've developed in-house. But there is about half of their stuff here they've had to buy in off other people. Looking at their HIV sales, and I've given them a good outlook, mainly because this Cabenuva product, which is a new product, is expected to generate 4 to 5 billion sales by 2030. And so that, along with this Dovato, should then replace the rapidly declining sales of Triumec and Tivicay. So overall, a good medium-term outlook, but a poor long-term outlook. You know, they have several products here, some of them in phase 2, but it didn't really look so good in the long term. Now this Sotrovimab here, this is actually their COVID-19 vaccine product, which I've lumped in here with Immuno-onco. But the sales of that are just disappearing as COVID seems to go away as a problem in the world. The governments aren't buying up all of these COVID vaccines like they were, and so this looks like to have been a bit of a flash in the pan. So then, just considering the immuno-onco sales down here, and there is a good growth trajectory for the medium term, so I think they've got a great medium term outlook. But bear in mind that the total amount is not very much, only 1.5 billion. So although they've got a great outlook in terms of growth, that growth won't lead to very much compared with the revenues they get from everything else. Also, it's quite notable that their Zejula products and Jemperli product, as well as the Benlysta product here, they've all been bought off other people. So most of all this is just stuff that they've not developed themselves, but they've had to in-license or gain by buying other companies. When I look at the pipeline, For Immuno, we had this otilimab fail in its phase 3 only this year, and then they have in phase 3 this AL001 product, which again they bought from purchasing Elector only recently for 0.7 billion. So there's that. It's kind of a bit thin actually on the immuno side. On oncology, there's a lot more. All of these at the top though, although they've got a load of phase threes going on at the moment, they are actually related to these existing products. It's just that they're developing new indications for those products. So this will boost sales, but it's not a whole new product line. And then down here, maybe it's a bit thin again. Some things in phase 2 and phase 1, but all of it's stuff that they've bought off other people. Only a couple of things here in phase 1 that GSK actually developed themselves. There were 2 products in phase 3 which I noticed seem to have been dropped since I last did a video on GSK, which was a couple of years ago. And only this year they bought Sierra Oncology. So for 2 billion they bought in this product, which is now a submission in the second half of this year. So overall, there's some growth there, but it seems to be a bit scrappy how most of it is stuff that they had to buy in. And so I've given them a great outlook in the short term, but a good with a question mark for the long term. And so they also have some other pharmaceuticals, and that's been approved actually in April of this year. And then there's another product in phase 3. So I've took a look at all of these areas, and I've kind of guesstimated their medium and then long-term outlook. And we see that, the 33 billion target is achievable, assuming that a number of these products in phase 3 and phase 2 are successful. But clearly, the vaccine business is a real bonus to them. I think that's going to be a lot of this catch up here. And we really do rely on the success of their Immuno-onco division in order for them to meet their target. So here I've got all of their approvals in the last 5 years. And the ones in blue are stuff which they've developed themselves. And really, it becomes more clear here that although they have very good research teams in respiratory and vaccines, it's a shame that for the other areas, they seem to be having to buy in products that other people developed rather than being able to develop them themselves. And I think this is a bit of a problem for GSK. The apparent failure of their scientists to be able to achieve the development of new products. So now to look at the past history of GSK versus the share price. And there's a bit of a backstory here because back in 2017, there was a bit of a boardroom battle between the CEO, who was then forced to quit, and some activist shareholders. And they wanted to create a new strategy that involved splitting off the consumer healthcare division of the company. So they took on this Emma Walmsley to do this. Now, I've been listening to her at the conference calls, and I'd say she's got a bit of a kinetic character, but she's quite lively. And actually, over the 5 years, I think she has kind of warmed to me a bit, and I think she's done a very good job in spinning off the consumer healthcare division, which is exactly the reason why she was brought in. They bought out the remaining 37% of the consumer healthcare unit that they owned from Novartis, and that was to create a bigger enough company that they would then be able to have a successful divestment from. And then they formed a new consumer healthcare company with Pfizer with a view to then making that the new unit that they would split off. And GSK owned 68% of it and Pfizer 32%. Unilever actually then offered to buy this consumer healthcare company off them for 50 billion, but they turned that down. And then they successfully achieved the Haleon demerger this year. And they also then did a 20% share consolidation in order to achieve that. But if you were a GSK shareholder, although you lost 20% of your GSK shares, you then gained shares in this whole new company, Haleon. So in a way, you kind of got two stocks for the price of one. But there was this irrational 20% drop in both the GSK and the Haleon share prices, which makes this point at the moment seem like a bit of an opportunity. Now, one thing about the Emma Walmsley appointment is she has, I think, been quite successful when you look at the company's revenues and its net income over the last 5 years, and looking at what she's achieved with the merger. I think she's actually done quite well, really, on paper. But it is quite noticeable that the CFO left in 2018, and then the CFO replacing this person left only a few months ago, and then the chairman left in 2019, and the chief scientific officer left that role to take on the CEO job at Altos Labs. Although he is still remaining as part of the GSK board, there's still a lot of people coming and going in this company. A lot of the senior executives are leaving. So that is something that's noticeable. Now, they bought Tesaro for 4 billion in 2019, and that's how they acquired this Zejula drug, which is quite important for their immuno-onc pipeline. And then they bought Sierra Oncology in 2022 for 1.9 billion, plus Affinivax for 2 billion again in 2022. So they've continued this habit of buying in products to try and make up for their failure to be able to develop them themselves. But having said that, the bottom line is looking good. Although it's kind of bad that they have to do that, they still are kind of achieving what they promise in terms of future revenues. And in order to kind of solve this problem of research and development at GSK, they did this deal with 23andMe. Now, 23andMe, they do DNA profiling. So you send off a sample of your hair or whatever, and they send you your DNA fingerprints plus some information on where your ancestry came from. And so this is an interesting deal because then GSK get access to quite a lot of data for people from all over the world to then help them with their development of medicines. And they announced in 2018 they'd be focusing on genetics and advanced tech to help develop new medicines. And of course, the problem is it won't be 10 years before you'll see the true merits of that because it takes that much time to develop new medicines. And in 2021, they announced their long-term plan for the new GSK following the Haleon demerger. And they were promising 5% yearly sales growth with 33 billion sales by 2031. They cut the dividend in half, which kind of sucks, but they promised they would have a progressive dividend policy from 2023. But the current dividend is now only about 4.1% at these lower prices. Now, they achieved the successful launch of sotrovimab, which was a very clever COVID vaccine and actually better than a lot of the other ones because it's able to target more of the new strains as they come out. But although they did get 1.5 billion eventually off the US government for that product, the governments don't seem interested in renewing those contracts as we seem to move away from the COVID crisis. Now, I put together here all of the different COVID initiatives which GSK worked on, and they spent a lot of money and seemed to invest a lot of energy on this massive rush to bring out a COVID vaccine. And although it's really cool that they were able to come out with a clever COVID vaccine, overall, although obviously they did it for the publicity as well as wanting to help people, and it was a great publicity coup managing to achieve a COVID vaccine, I can't help but wonder, was it worth all the effort and money they put into it when you consider that they only really gave them a flash in the pan of a couple of a billion for 1 year in terms of revenues? I mean, there is maybe there is maybe an argument that maybe some of the discoveries they made in producing sotrovimab might be able to help them come out with products for the flu and stuff like this. So maybe it is worth that massive impulse of energy, but it's hard to know. We won't know for some time if that's the case, or if really it was kind of done because kind of like you had to be seen to be doing something to help fight COVID, but was it really the best use of resources? We don't know. But again, there's just so many kind of complications with GSK, I find. So then, like the final piece of news is this: otilimab failed its clinical trials. So here's the news release, and of course, people who invest in pharmaceutical stocks really dread these RNSs coming out. So the product did not demonstrate statistical significance on the primary endpoint, and it's unlikely to transform patient care. So as a result, GSK has decided not to progress with regulatory submissions. So that's the problem. They've got to continually come up with new products, and there's all these billions spent to get to phase 3. And of course, then they can fail their clinical trials, and all that money's lost. So that's part and parcel of why it's quite scary to invest in pharma stocks. But overall, to summarise all this here, Emma Walmsley's done a great job in achieving this demerger to form Haleon and get rid of the consumer healthcare division. But at the same time, it's been kind of a tumultuous time. But actually, as we'll come into, the bottom line isn't bad. But it's kind of a shame that they're having to buy in all these new medicines rather than them being from their own pipeline of in-house developed medicines. So now to look at the income statement. And actually, there's fairly robust revenues here. You know, they do they are maintaining a good trend here of increasing revenues. And the net income, the general trend is positive, but it does seem to flap around all over the place. Now, I put here the 2022 9 months adjusted data. So this is then after the Haleon is removed from the business. So obviously you expect lower revenues, but actually, once you take away the Haleon, I only really calculate a 5 billion drop in revenues year on year. And we see that the operating profit is not that far behind what it was when they had the Haleon. And then also the net income is about 5 billion. So not far off what it was. So actually, in terms of the income statement, GSK post the merger look really good actually, I think. And actually in the Q3 guidance they say that they're expecting a increase in revenues to about 8 to 10% CER growth compared with 2021. So their sales are doing really well. And that's across all the three main buckets that they use, or business segments that they use. Really good growth across the board. And from my interpretation of their Q3 data here, they say that they're getting a 10 billion, what I call cashback from this demerger. So they're going to have like a 10 billion boost to net income in 2022, if I've got that right. You see it here. It's for the Q3 period. A nice 10 billion cashback boost thanks to the demerger. So really, in terms of the raw numbers, I think they're looking really good. Plus, they got like a 10 billion extra bonus coming in for when we get to the 2022 full year. Just to pick into the details a bit, there were a few more excessive costs here for admin expenses and cost of sale for admin expenses, and that seems to be related to the consumer healthcare preparation work. And so now that they've got the demerger, those extra costs will go away. So we should see this starting to look more healthier on the expenses side now that they've achieved the demerger. But it's this other operating income and expense that really makes it more of a bit of a moving top that really makes their expenses a bit too much of a moving target where it can flap around by a couple of billion every year. They sold their oncology business to Novartis for 9 billion in 2015, and then they sold their Horlicks and some other brands in 2020. So obviously those then lead to a kind of artificial increase in their overall net income for those particular years. Worst thing is though something related to Viv Healthcare. I've summarized it here. So within this other operating income and expense line on the expenditure, that is then further broken down into these reporting lines. And really, you see that the worst one year in, year out is this contingent consideration recognized in businesses. And this is mostly because of this thing with VIIV healthcare. So actually, a lot of their HIV drugs that they currently sell, they come out from taking over of Viv Healthcare ages ago. And as part of that, they have to pay Shionogi billions of pounds each year, or at least 1 billion every year, to compensate for part of the deal of when they took over those HIV drugs. And so, again, they're having to buy other people's businesses in order to create their revenues rather than it being totally developed themselves. It results in this £1 billion, or maybe is it 2 billion sometimes, or sometimes not much, but it's like a flapping around of 1 billion to 2 billion every year, which kind of is a bit annoying because it makes them a bit of a moving target when you're trying to pin down their expenses. But still, even when you take account of those complications, there's a general trend here of the income walking away from the expenditure and of a increased net income trend. And now that they've achieved this, demerger, and their sales do look good in their latest updates. Plus, now that they've achieved this demerger, we can expect lower expenses overall. So it does kind of look good. The kind of raw numbers look good. And now to look at their balance sheet, we can see a interesting trend where they bought 15 billions worth of consumer healthcare off Pfizer to create a bigger unit that they could then sell, and then to create a bigger unit that they could then demerger successfully. And you can see how greatly that affected their assets here. And then now that they've created the Haleon unit as a demerged entity, you can see their assets and net assets have significantly reduced. So they now have a lower asset profile that you should have for a pharmaceutical company. And you can see that most of the drop in assets come about from their goodwill and intangibles, which you can see dropped quite significantly here. And what's interesting is in their current assets, they have now quite a lot of other. In fact, there's 3.5 billion of what is essentially just shares owned in Haleon. So when they demerged, they actually did hold on to some of the company as equity, a fairly small percentage. But actually, I think it's in a way, I think they should just hold on to those shares because they'll get a nice little dividend income from that. In terms of liabilities, you see here the contingent consideration liability does stand out as all part of the hangover in a way of the Shionogi deal related to the takeover of Viv Healthcare. And another notable thing is their debt, which is around 19 billion. And of course, I really don't like them having debt like that. So this is before the demerger. So following the demerger, you can expect the amount of all this consumer healthcare brands to disappear, plus a lot of the goodwill to disappear. But taking that into consideration, a lot of the composition of their assets seem to make sense to me. And that isn't always the case with some of the stocks I look at. But in their case, it does all seem to make sense. You've got, reasonable bit of cash, inventories, which is the stuff that they've made that they're about to ship, the accounts receivables, which is medicines that they've sold but they've still not been paid for yet, and a relatively small footprint of property, plant, and equipment. So these pharmaceutical companies, they generate a lot of revenues from a relatively small footprint of manufacturing capacity and capex. The debt situation looks, not too good to me. Actually, I don't really like the amount of debt that they carry relative to the assets, and you see the market cap looks a bit good. I mean, it looks a bit heady here, but actually, as we'll go to in a moment, compared with other pharmaceutical stocks, it's actually quite reasonable. Now, this graphic has been adjusted for what I expect following the Haleon demerger, and they have a price to sales of 2 and a price to book of 6, with price of earnings of 11. And so really, it's a bit unfortunate that all this data here also includes the healthcare business. So we've got nothing to compare with post demerger, which is kind of makes this not really the perfect data for GSK, unfortunately. When I look at the raw numbers, the new GSK is a price to book which is double that of the old GSK, but otherwise, in terms of price to earnings, it's fairly similar. And even the new GSK, it does look quite reasonably valued against its peers here. So you can see that here we have Dechra Pharma here and AstraZeneca, and GSK look fairly reasonably valued versus them. And so now to consider the sector situation, and for healthcare stocks, there's a general trend, really a general linear trend up with the stock sector. And this does make sense to me because over time, you have inflation for starters, and pharmaceutical stocks are very inflation proof. And so, you expect the value of all the pharma stocks to go up with inflation, but also we've got an older population, and because of medicine, average the age that people die seems to increase with time. So you've got more and more people getting older and older, and they tend to be richer people. So there's a lot more people to treat with medicine. So it does make sense for me that the value of pharma stocks are going up. And actually, as a long-term trend, I'm quite bullish on pharma stocks, and I want to invest in pharma stocks for that reason. Obviously, though, it's looking a bit heady here, up here, though. You kind of want to be below the trend line and up. But a more important point, the more important point really is at what point of the market cycle do you want to be investing into pharmaceutical stocks? And I looked at all these different resources who all tell you in different ways what part of the economic cycle you should be investing in pharmaceutical stocks. And actually, most of them say that it should be in the early recession phase where you're having the bear market. Now, actually, judging by the FTSE 250, we are currently in a bear market. So, actually, now should be the time to be buying these pharma stocks, according to most people. But not everyone agreed, and actually, two of these spilt over into other time periods as well. So I actually took a look myself, and here I've got the healthcare sector put against the FTSE 100. And what you see is actually when we had the dot-com bubble, that was a 3-year bear market, and the pharmaceutical stocks actually dropped in value with the dot-com bubble. And here's GSK, and we can see year 2000, actually, during that 3-year bear market, it dropped. And AstraZeneca ultimately dropped at the end of that bear, at the end when we came to the end of that bear market. And then when we get to the credit crisis, that was a 2-year bear market where the FTSE dropped, and so did healthcare stocks, even though it was actually quite modest compared with the drop of the FTSE, they did still drop. So let's have a look from mid 2007 to mid 2009. So AstraZeneca dropped but rose, and GSK also dropped from mid 2007 to mid 2009. Although it was very volatile, all these people were saying buy pharma stocks during a bear market. But when I actually look at the pharma market index and compare that with real bear markets that happen, according to my data here, I think it's best to actually invest in pharma stocks when you're at the early stage of the bull market. So I agree actually with these two sources here to buy during early recovery, and I disagree with all these experts here. So to wrap up the sector, I think this is definitely a good sector to investing in the long term, but I want to wait until we but I want to wait till we get to the end of the bear market we're in before going in on pharma stocks. So now to do the cash flow, and they generated 8 billion from normal activities, and that's a fairly quality 8 billion, with 5 billion definitely from selling drugs. And they had to spend 1 billion, which didn't seem like that much, on capex, 1 billion from other investments. They have to spend 2 billion from paying off those debts, and zero point 0.8 billion on interest on debt, plus they pay out 4 billion on dividends. So overall, that was a 1.8 billion cash drop. However, bear in mind that they did pay off 2.2 billion of debts. So when you take that into consideration, they've got a fairly they have a fairly healthy cash flow of positive plus 4 billion. In terms of shareholders, I wasn't able to detect anything much going on in terms of share ownership. It's actually complicated because of the demerger and the share consolidation. And so, but actually, I don't believe these guys did sell any other than shares that they lost because of the consolidation of shares. So really, I can say they've hardly got any retail investors is one thing. Other than that, not really much to say about their shareholding. So overall, it's been like a tumultuous 5 years really for GSK. I think that Emma Walmsley has done a good job. Looking at the raw data, looking at the raw numbers, particularly after the Haleon demerger, I actually think at the end of the day, the numbers look good for GSK. And I do think their 33 billion target looks quite reasonable in light of how well their sales are improving even now, particularly in the vaccine division, and then also considering that they do have this pipeline here. The facts are looking quite good, really, but then you have all kinds of murky waters as well around. Uh, you know, is their current R&D strategy going to be a good one? There's been a lot of people coming and going, which is which kind of muddies the waters a bit. And it is a shame that they tend to buy in a lot of their future growth rather than being able to develop it themselves. But at the end of the day, the raw numbers mean that I probably would be investing them given the inexplicable 20% drop in both GSK and Haleon. If we was in a different market, I'd probably just be going in now and buying up GSK and Haleon at this 20% discount following the demerger. But that is kind of despite muddied waters generally with this stock. And ultimately, the sector analysis tells me that I want to wait until we're early in the bull market before I start investing in pharma stocks. So, whereas I'm being quite cautious this year anyway, maybe I'm wrong and we're going to be stocks are going to be all pumping from now on. But my current conservative assumption is that we are in a bear market, and so based on that, yeah, I'm not planning to buy any farm stocks anyway until next year, at the minimum, maybe even longer than next year. So really, I'm just going to have to hold my horses. I'll put them in my watch list, and then once we've got some more data, it'll be great to get their next full year where they'll have a corrected data post which takes account so that because then you'll have comparative data going back a year or two in order to fully assess the new composition of GSK following the demerger. So it'll be good to have the extra data, also more data on how their sales are going, and good to look at them again when the time is probably right on the sector front to be investing into pharmaceuticals. So to summarize, the company's targets of 33 billion revenues by 2031 do look quite possible. The vaccines are quite a real plus for GSK, but the success of the immuno-onco pipeline is essential for them to meet their 2031 target. It's a bit unfortunate, but GSK seems to be more of a in-licensing company that buys other people's products to add to their revenues rather than developing its own. There's a irrational 20% drop in both the GSK and Haleon share prices following the demerger, and this would be good grounds to buy both if we weren't in a bit of if we weren't in a dangerous market. It's hard to assess their earnings performance because Their expenses seem to flap around a lot due to this contingent consideration liabilities related to the Shionogi Viv Healthcare takeover. And GSK is currently tricky to value due to complications coming about from the Haleon demerger. So that's why it'll be good to look at when they do start having their full years following that demerger. I'll be able to have a much nicer comparison of how they're composed. But based on my sector data, I want to wait until we're in the early recovery phase before investing in pharma stocks. So my verdict is to keep them in my watch list, but I really want to wait out the full year results and get some more data to de-risk the valuation blind spots here. And also, I think it'd be a good idea to research some other pharma stocks for better context as well before investing in GSK. So that completes my stock markets analysis update for GSK. I hope you found that useful. Please remember, I'm just doing this for a laugh because it's kind of a hobby I have, and I do actually really enjoy doing these videos and learning about these companies. But I am just doing it for a laugh, not as someone who pertains to give people professional advice. So make sure before you do investment decisions, you don't just use YouTube videos as your source. Make sure you seek proper advice of a professional. But whatever your story, whatever you're doing, good luck and have fun and stay safe.
Please read the disclaimer. Remember that prices can go down as well as up.